Hello, hello everyone. Happy new month to you. Good morning, and depending on what time zone you're tuning in from, good afternoon and good evening to you all. And welcome to a brand new month, a brand new trading week. In fact, it's great to have you all back once again. And if you are tuning in for the first time, of course, this is the Forex Morning Mastery. We run this 3 times in a week, where we meet every Mondays, Wednesdays, and Fridays to break down the markets, get aligned, and of course, trade from a place of clarity. My own name is Sheriff Daramola, and I'm going to be taking you on a trading journey for the next 40-45 minutes, depending on how soon or later we round off the session. Well, it's interesting at this juncture. This week kicks off with the US dollar holding strong after last week's hawkish tone from the Federal Reserve, and markets are opening November with that typical first day of the month optimism. We all know what happens at the beginning of the month. New books, fresh capital flows, and traders ready to set the tone for the weeks ahead. And this week, I'm going to be watching the US crude oil, the GBPUSD, USDJPY, and the gold market. And in this session, I will be taking you through each one of them together, where we shall be looking at things from both technical and fundamental perspective to identify best opportunities from any structural detail we can get on the chart. During the weekend, I wasn't able to share with us my outlook for the week. It was a hectic one. I've been trying to see how I can handle my busy weekend. Unfortunately, I wasn't able to turn up on Saturday and Sunday to share my market view. But thank goodness, today we are going to be doing a top-down analysis on all of these assets we are going to be looking at this week. And if you are a fan, or let me say, if you are planning to trade any of these assets I talked about, that is the US oil, the GBP USD, USDJPY, and the gold, you don't want to miss out on the deliberations we are going to be having this morning. If you're new here with us, make sure you hit that subscribe button. This is how we grow together. Um, Click on the like button, stay sharp, and let's navigate this changing market side by side um, every week. So, the first thing we are going to be looking at, as always, is to go into the US dollar market dynamic, right? And in the US dollar market, we want to see how the sentiment is playing out in the market, especially when we are trading major instruments that has a lot to do with the US dollar. And of course, if we can get a perspective into what may likely happen this week, then we can easily key into that direction on the respective assets that we are looking at. So, as always, this is the DXY chart you see on my screen, the 4 hours time frame of the DXY. And for those of you who are new with us, or probably you don't know what this is, the DXY is an instrument that gives us an overview, a general view of how or let me say the general view of the performance of the US dollar over a certain period of time. And what we see here is the 4 hours time frame, and the structure we marked out last week still remains the same. For those of you who were with me last week, remember we had this beautiful ascending trend line since mid-September, which is still holding as price action has consistently respected that trend line. As you will see, higher highs, higher lows, higher highs, higher lows, higher high. At the beginning of October, we saw a higher low here, and right now we are at a higher high as we saw price culminate last week at the $99.85 level, breaking out of that key level at the $98.50 level for the first time in 3 to 4 weeks. Now, last week trading session, this was where price action started. It started somewhere around this trend line as market respected that trend line one more time. And the fact that price was unable to break down the trend line despite the Fed cutting interest rate last week shows that this trend line is a formidable one. So last week we saw the Fed cut rate by 25 basis point basis point, and of course, after the cut, Powell went on to give an hawkish remark, hinting that this could be the last cut for the year. Now, that shifted market sentiment from the easy policy that everyone had held on to since the beginning of the year to the Fed might be done easy. Now, this of course, pushed U.S. Treasury bond yields, and you know when the Treasury bond yield is doing very well, the dollar tends to continue to gain value. And to add to that is the renewed geopolitical tensions, U.S.-China chip restriction. We also have the U.S.-Russia strikes and a prolonged U.S. government shutdown. And traders found more reason to park money in the dollar as a safe bet, right? And this whole narrative supported the momentum we saw here last week, breaking out of that $98.50 level. Now, something interesting happened on the final trading day of the week. Let me zoom in so we can see. And one thing you will notice here is that as soon as price got into that $99.85 level, buyers have been finding it difficult to break through that particular area. And this for us is a sign that there might likely be an indecision going on in the market where markets are looking to see whether they should continue to hold on to the US dollar or it's time to do some profit taking, which might bring price back to either the key level at the $98.50 level to continue the uptrend or drop to as far as the trend line before another momentum begins. Now, as we step into November's first trading day, markets are carrying that bullish momentum from last week. As you will see, the market is forming something that looks like a bullish rectangle pattern. So we have the impulsive move, price confined within a rectangle sort of pattern. Depending on which perspective you are looking at it from, you could call it a flag pattern, you could call it a bullish rectangle pattern. But the most important thing here is looking more like an uptrend continuation pattern. Now, the focus shift to this week's high impact event. Now, if we look at the economic calendar here, today, the Monday, November 3rd, we are looking at the ISM manufacturing PMI and a bunch of Fed official speeches coming up later in the day. Then tomorrow we're looking forward to the a couple of speech too as well. Then the ISM, sorry, a couple of speech here on Tuesday. Where's Tuesday? Okay, here Tuesday. Then we have the JOLTS job openings. I doubt if that will happen due to the U.S. government shutdown. But on Wednesday we have it the um, ADP employment change. That's a labor-oriented data. We have the ISM services PMI, and then on Thursday, I don't know why my mouse keeps returning back. So on Thursday we have nothing. Okay, we have a bunch of Fed official speeches. Then on Friday we have the average hourly earnings and the almighty non-farm payroll. Now, prior to the NFP, if the data comes out strong or Fed officials from the speeches they give echo the narrative that was pushed forward by Powell last week, we could see the dollar break out of that $99.85 level to continue the uptrend scenario that started last week and possibly stretching towards new highs. But if numbers disappoint or the Fed officials soften its tone, we could see some short-term profit-taking activities, which could bring price, which could drag the dollar back maybe into the $98.50 level or the ascending trend line to retest it before finding support again. So in short, fundamental still favors the bullish scenario, as you will see, but today's tone and this week's data will decide if the dollar keeps climbing or pauses for breath. Now, to help us navigate the US dollar market, this is the simple structure I will be using. And if price breaks down the $98.50 level, this will confirm to me that we could be going through a pullback as a result of profit taking and then look out for support anywhere between this ascending trend line and this trend line before another wave happens. And if price comes into the $98.50 level and sellers find it difficult to break through, continued buy pressure will trigger bullish expectations. And if price breaks out the $99.85 level, that will further support an uptrend move. So technically and from a fundamental perspective, we are still within an uptrend scenario. So the path of least resistance here is to the upside. So what we are deliberating on right now is what path, what pattern will price action take? And of course, time will tell, but we will be using this structure to help us understand what's the sentiment and how market participants are digesting the fundamentals. Now, with this information we have gathered here, let's go into the US crude oil market. So I will be taking you through a top-down analysis on this market since I didn't share any market review during the weekend. So we will be taking it one step at a time. And this could take a longer time for us to run through, but I think it's better we do the needful. So right here on the US crude oil market, as you will see, the descendant trend line we marked out last week still remains intact. This descending trend line captures the series of lower highs since June of this year. That's about 5 months of historical data. As you will see, price had consistently respected that trend line. And of course, when price trends below a trend line, we want to continue to look out for selling ideas, except if some surprising narratives pops up in the global market. Now, if we look at what has been going on here in the last 1 week, so last week, this was what we saw. Price of crude oil increased tremendously last week following the easing tension between the US-China relationship. And then we also had a scenario where the EIA or the API report showed that demand for crude oil in the United States increased last week. So we saw this whole move started somewhere around here last week and then found support between the $59.50 level and the $60 area. Let me say the $60 area in short. As you will see throughout the second half of last week, sellers were unable to break down that demand zone, making it a crucial juncture going into the new week. And of course, you will see what I've done here. I was able to mark out my key level at the $60 area. And interesting enough, if we go to as far back as the beginning of October, we saw how that $60 area played a significant role in determining the direction of price action. At the beginning of October, it was a demand zone, as you will see here. Then fast forward to the second week of October, it became a selling niche as price broke down that particular structure. Then fast forward to last week, we saw price come back above the structure and maintained momentum above it, making it a crucial juncture going into this trading week. Now, with the way things are going, you'll see that the week started with a bullish trend, bullish momentum. But before I go into what's happened this week, I want you to understand here that price is at a crucial juncture. These are the descending trend line we marked out earlier since June. This is the primary trend line here, the thick one, and then we have the temporary one right here. Now, one thing I've noticed is how it appears buyers are struggling from this particular point. And the same thing also happened on Friday. We saw after this engulfing bullish candle, price came into the structure. We saw some selling pressure, consolidation happen. But since this week began, we can see that the market is looking a little bit choppy around that trend line. So we don't know if price will respect it and continue to the downside, or it will support the next wave of bullish momentum. Now, when we scale down into the 1 hour time frame, we will begin to see things much more clearly. And since the new week began, this is the new week, we saw this massive engulfing bullish candle spring out from the $60.69 level, breaking out of that descending trend line we talked about earlier on the 4 hours time frame to initiate a an idea that the buyers are getting stronger. Now, why is that happening? Well, during the course of the weekend, there is this report that OPEC is going to be pausing output hikes for early 2026 amidst oversupply fears. While tension in the Middle East and Ukraine drone strikes on Russia's oil ports had a bullish tone over the weekend. And as a result of that, the market reacted positively at the start of the week with this engulfing bullish candle. And since that happened, we saw a resistance at the $61.23 level as price goes into a consolidation. Now, if we also consider the stronger US dollar from the Fed's hawkish stance, we may likely see a cap in this uptrend. And if we also consider the fact that price is around that descending trend line, we should not in any way ignore the potentials that sellers can also come into play. So while we have a bullish idea, price remains above the trend line, we should not ignore the possibility that sellers can come in, and we should also get prepared for that scenario as well. So At this juncture, I want to think that traders may want to be cautious, uh, or let me say cautiously optimistic as the month opens, awaiting tomorrow's API inventory data from the United States for fresh direction. And to help us navigate this anticipation, we have this new structure here where I can see price is confined within the $60.69 level and the $61.23 area, where you of course know what we expect to do at this point. It's either price breaks out the resistance line to give us an opportunity to buy, or break down the support line. In fact, if you look at this closely, by the time price breaks down the support line, we will be below that descending trend line, which definitely could incite selling ideas. So personally, I already placed a buy position on my trade. As you will see, the position is not doing very well at the moment. So hopefully price moves as expected. But if it doesn't, it's all well and good. It's the start of the week. We still have like 4 more days to go and to recoup whatever loss we incur if that is going to be the case. But I strongly feel that price breaking out of that descending trend line, the sentiment in favor of OPEC's cutting down on their output expectations may likely give the crude oil some room, maybe into the $62 areas. We're looking at something between 60 to 80 pips of price movement before um, something significant happens again. So personally, I remain bullish, pending until the structure states otherwise. And that is what I will be using to navigate my market for the first half of the week. If price breaks down the $60, 69 cent level, then I will be joining a sell after a retest of structure. So my stop loss on this buy position is the first one is right below the support line here. Is that so? Okay, that was wrong. So let me just replace my stop loss. My stop loss is right below um, that um, that support line here. So let's see how the market is going to play out. If you have any question, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset, so that we all know that we are all on the same page, right? Stay tuned in. All right. I guess we will be moving on to the next asset on our watch list. Stay tuned in. So the next asset I'm looking at this morning is the GBPUSD. And remember, we were selling the the GBPUSD last week as we took advantage of that bearish move starting from somewhere here, and then it ran all the way down into the 1.3100 area, giving us a minimum of about 200 pips before the market went into a consolidation between Thursday and Friday trading session. And for those of us who are part of this journey, well done, kudos to you for being faithful to our analytical approach. Now, going into the next to this week, we can see that price of the pound sterling remain below that descending trend line. So you can see this descending trend line captures price action from mid-September. That's about 6 to 7 weeks of price movement. And at a point in time, price broke above that structure, and we were feeling that the pound may gain traction based on that fact, but the fundamentals from the UK didn't really give the pounds that support it needed. And following the strength of the US dollar, we saw price drop back below the descending trend line. And of course, at this point, it is reasonable to consider selling ideas since price remains below the descending trend line. Now, um, like I did say earlier, the dollar is still looking very strong at the moment, especially after the Fed chairman dismissed another December rate cut. Then on the other side of the pond, the United Kingdom fiscal worries and growing expectations of a Bank of England rate cut may also weigh in seriously on the current market sentiment as traders eye Thursday's Bank of England interest rate decision. So we can see by 12 p.m. UTC on Thursday, the Bank of England will be deciding whether to cut or maintain the current interest rate. And the majority are projecting that the rate will be kept at the 4% that it is at the moment. And if it happens that the Bank of England cuts interest rates, this may likely incite a massive move to the downside. So the mood right now on this first trading day of November is leaning towards a defensive approach with sellers still holding control at this point. Now, with my key level at the 1.315, I want to be using this one here to guide my decision going into this week's trading session. So, and the reason why I chose the 1.315 is more evident on the daily time frame. So let me quickly share with you what I saw on the daily time frame that supported me using the 1.315 as my key level. Now, I went to as far back as when was that? August of this year. That's September, October, November. That's about 4 months. And one thing I noticed is how this 1.315 had played a significant role in determining whether price will move up or move to the downside. So you can see around this point in August, it was more choppy for a while. Then at the beginning of, okay, mid-September, we saw that level serve as a support line, though it didn't last long. Within a week, at the beginning of last month, we saw price drop below that structure. Then that same structure served as a resistance point for a while in April, as you will see here. Then it broke out the structure here again, that's in April. And since then, what did we notice? We noticed that every time sellers bring price back into the structure, they find it difficult to break through. And you saw what happened here in May. You saw what happened here in August. As you can see, every time price comes in, buyers take over the market and push price up. It came in here again in August, it pushes up. Then right now, as at last week, at the end of last week's trading session, we saw price close exactly at the 1.31500 level. Now you can see this area in the last April, May, June, July, August, September, in the last 8 to 9 months has been a strong support line. Now, you can see why this area for me is serving as my key level going into this week. Now, the question here now is, will this line support price again? That is, price maintains the support and then continues the uptrend from there? Or will the 1.315 be broken to the downside, which makes this whole juncture a crucial one? So that is basically why I chose the 1.315 as my key level for this week. Now let's go back into the 4 hours time frame. Now, price is below the 1.315 at the moment, and you know how we do it. We want to be looking out for selling ideas. Now, when we scale down further into my execution time frame, that is on the 1 hour time frame, this was what I was able to find. Now you can see, so the week started on a bullish note, right? Price started the week around the 1.31300 area, just right here. We saw an engulfing bullish candle. Price found higher highs, higher lows, higher highs, higher lows. Then we saw a little breakout of this point where I did have a buy triggered but didn't do well. And then price came back down again to slightly. This is price action in the last 25 minutes. We saw a slight breakdown of that structure, giving us clues that sellers may likely still have that momentum to continue the downtrend move. And if we consider the fact that the market has been on a strong downtrend since last week, the chances that price could drop further remains intact. And if we take into account the fact that um, the Feds are sounding hawkish, and the Bank of England is likely leaning towards either cutting interest rate or keeping as it is. And with fiscal worries in the UK, the labor market not doing well, and the um, the budget, the borrowing budget too, is not too good. I think the path of this resistance is to the downside. So if you want to be part of me on this, be with me on this trade, you might want to be looking at placing a sell stop order below the 1.313 where I did sell. I've sold already, and with your stop losses right above the support line. Let's say to give enough breathing space right above the key level at the 1.315 as stop loss, which is about 20 pips stop loss thereabout. So that is what I'm looking at on the GBP USD. However, if buyers want to come into this market, what are the conditions that will make me feel confident to buy? Well, to buy now, if I'm not yet taken out of the current buy position, to buy the GBP USD, I would like to see a breakout retest of structure. I want to see price break out the structure first of all, then come back, retest the structure where I can see signs that buyers are building momentum and sellers are losing traction, which of course will be right above the key level at the 1.315, and of course stop loss below the support line here at the 1.31300 area. So that is my simple view on the GBP USD going into this week. Do we have any other economic event from the UK? Okay, we have the Bank of England, some officials speaking tomorrow. What else again do we have from the UK that could also play a significant role in price movements? Nothing else again. Okay, so we'll be looking to the NFP2 as well on Friday. We'll talk about that when we get there. So that is what I'm looking at on the GBP USD. If you have questions, feel free to let me know in the comments. And if you need clarifications too as well, feel free. I'm here to share with you my experience and what I think about the current market dynamic. So let's wait for about 5 to 10 seconds and see if there are any questions before we move on to the next assets on my watch list. Stay tuned in. all right. So I guess if you had placed that self-stop order, it should have been triggered right now. We are looking at between 20 to 25 people stop loss on this one, and let's allow that trade to run. So I wish us all the best of luck on this one. So moving on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the USDJPY. So that's the US dollar against the Japanese yen. And what you see here is the 4 hours time frame of this instrument. And it is quite clear that throughout October, price had consistently found higher lows. Here, though, we are yet to see some significant higher highs, but it's most important to acknowledge that we had some higher lows here, giving us this beautiful ascending trend line to work with. And as long as price remains above an ascending trend line, we obviously want to be looking out for patterns and structures that support buying ideas, right? And another thing that's also um, um, happened on this chart is how the price broke out of the 153.00 level last week for the first time in about 3 to 4 weeks. Price finally broke out of that structure with an engulfing bullish candle. And so this whole movement was favored by um, the Japan's new minister's ideology of big spending. And of course, the Bank of Japan also stayed dovish in their narrative. I think last week we had the Bank of Japan interest rate decision where they kept interest rates the same. They kept interest the same, and the narrative was more or less dovish, which of course did not augur well for the yen. And this kept the yen under serious pressure. Now, despite talks of possible intervention, strong data from the US, that is the Fed hawkishness, continues to fuel bullish sentiment. And traders right now are looking to buy deep anywhere around the structure since price still remains above the trend line. Now let's zoom into the structure. Now we saw that bullish move happen last week, Thursday, and as soon as price broke out and tested the 154.3, we saw price go through a consolidation going into this week's trading session. And for me, consolidations like this tells me one or two things. First of all, markets are waiting for some important data to come in before making aggressive bets. And when we look at the economic calendar, we are talking about a week that has ISM manufacturing PMI, ISM services PMI, average hourly earnings, and of course the non-farm payroll. So definitely this is a clear signal that major key players in the market are stepping aside, waiting for data to start coming in before deciding on whether to start doing some profit taking or continue to buy the US dollar. So with price remaining within this range, there are two possibilities for us here. First of all, we may likely see price drop below the support line of the range, coming back into the 153 or the trend line to continue the uptrend scenario, or we're going to see a break above of the resistant line to trigger an uptrend continuation. So that means this whole structure we have here will either turn into a reversal setup or a bullish setup, depending on how the market digests these fundamentals. Now, let's scale down into our execution time frame. That is the 1 hour time frame to see what has been going on since the new week began. Now, going down into the 1 hour time frame, first of all, I was able to spot a pennant structure. So we can see we have this bullish impulsive leg, right? Price going through a consolidation, and look at that beautiful structure we have here. So it's either price breaks out the structure to continue the uptrend move, or we're likely going to see a breakdown of the structure to incite a pullback, maybe down into the 153.00 area for support. Now, let's look at how the week has begun. So if I zoom into the chart closely, you'll see that since the new week began, price action has been consolidating, confined within the 153.990 and the 154.250 area, emphasizing the prevailing uncertainty at this point. And of course, you know how we use our range bound. If you want to join any opportunity here, we either wait for price breaking out of the structure at the 154.250 to continue an uptrend move. I already had the buy position triggered at that point and not doing well anyways, but I continue to maintain an uptrend scenario. But if price breaks down the structure at the 153.290, please let's wait for a retest of structure to happen before we jump into a sell, and of course stop loss at around TP around the 153.00 area, which could dovetail to about 100 pips thereabout to find support. So that is what I'm looking at on the USDJPY going into this week. I hope I made myself very clear. If you have any question, feel free to let me know in the comment section. So we shall be moving right into the final asset on my watch list for this week. And of course, let me bring out the chart. So the final asset I'm looking at is my favorite, of course, the XAUUSD, popularly known as the gold spot. And this is what we have here on the gold commodity. The uptrend scenario is still looking very much intact, as I was able to capture an ascending trend line since August, as you will see, capturing all the pivot lows till the present moment. And for the fact that price still remains above the trend line, it is likely that the uptrend scenario remains intact, right? Now let's zoom into the structure here. So last week, it was more of selling the gold. We saw the gold started the week very poorly. It dropped into the trend line, tested 3,905, and during the second half of the week, we saw price confined within a range, finding higher lows within that structure to emphasize the prevailing uncertainty ahead of this week's trading session. So for me, I want to see, look at the $4,000 mark. It's just around this area. That's a very strong psychological level. And I can tell that gold is over and around the structure as safe haven demand rises on US-China AI chip tensions and the prolonged government shutdown. Still, the Fed hawkish tone and strong dollar cap of the upside is still there. So we need to be very careful. And if we are jumping into a buy at this juncture, we need to see serious confirmation that truly buyers are gaining traction. And we all know how early month psychology is. Sentiment is usually mixed. Buyers may be cautious, but alert to any signs of economic strain. Now, for me, I'm looking to buy anyways, and the reason why I'm buying is this: I can cite a couple of hammer candles here, which tells me that buyers are still present in this market, and of course, the confirmation that will make me feel good in this buy position is that this 4025 level gets broken to the upside alongside with this descending trend line, we mapped out here. Now let's scale down into the 1 hour time frame, our execution time frame, to see what I saw and what made me to buy the gold this morning. Oh, the trade has already been taken out. I bought the gold this morning, and lo and behold, the trade has been taken out. I'll have to buy again because it's looking good to buy from this point. Now, look at the structure here. This was what I was able to find today, this morning. So we can see the week started bearish, price dropped, found support at the 3,999, and then it climbed back up close to the $4,000 area. And look at what we saw. Price did breakout, retest structure, and look at that's the descending trend line I showed you on the 4 hours time frame. It's got broken, and we're likely going to see price continue to the upside. So I'm buying right here and then have enough breathing space for price action to move around because of the possibility of um, volatility that would happen during the course of the week. So that is what I'm looking at here. And to sell, I really need to see confirmation here before I jump into a sell. Selling below the key level at the 3,950, just right around that ascending trend line. Please, I'm waiting for confirmation before I join a sell. So a breakdown retest is all I need to be part of a bearish move in this market. So that is what I'm looking at on the gold commodity for today. If you have any question, feel free to let me know in the comment section. So it's on this note I've come to the end of today's Forex Morning Mastery, where we've been able to do a top-down analysis on all of the financial instruments on my watch list for this week, which includes the USDJPY, the US crude oil, the GBPUSD, and of course the gold commodity. And through this session, we were able to identify simple trading setups which reflects the current sentiment in the market. And of course, we are using it to navigate the market for the first half of the week. So let's see how the market will play out. If anything new comes up, maybe a setup comes up that I didn't share here, the market evolves into something new entirely, I will be updating us accordingly. And then I'll be sharing some signals this week. Last week, because of the interest rate decision, I wasn't able to share signals. I don't like doing short-term trades whenever the interest rate decision is at the corner. So I didn't share any, but this week I will definitely be sharing at least 2 or 3 signals for the week. So if you're a premium member with me, expect some signals on either the GBPUSD, gold, or USDJPY. So I want to wish us all the best of luck today. And remember, before you dive into the charts, please note that every setup is only as good as your risk management. Don't let emotions trade for you. Size your positions wisely and protect your capital. The goal isn't to win every trade, it's to stay in the game long enough to master it and capture that strong momentum everyone is waiting for. So, for those who just joined us, I hope you were able to gain 1 or 2 things from the session. If you did, why not join us in our subsequent editions? The more time you spend with us, the better you get to comprehend my analytical approach. So I wish you all a focused and profitable start to the month, and I'll see you again on Wednesday for our next session. Until then, trade smart, trade consciously.